Welcome back to our quarterly premium show, Quarter Se Quarter Tak. We just analysed IT stocks and FMCG stocks for you. Now, of course, to the stock that everyone watches for, practically every day, auto stocks. Naveen is joining to tell us what to expect from that space. Naveen?
Well, talking about the auto pack, the overall revenue growth is expected to be subdued for the consolidated sector, majorly led by the hit due to GST disruption as well as the BS4 transition. Also, margins will be negatively impacted on the back of the negative operational leverage which will happen to the overall auto pack. Also, among the segments, two-wheeler segment is expected to be an outlier as there will be an impact of the BS4 which is be minimal as compared to the other auto players. On the other hand, Eicher Motors, Hero MotoCorp as well as Maruti, these three companies are expected to be outliers. Continuing with Maruti, the revenue growth is expected to be strong, majorly because of their push to the higher price models. On the other hand, Hero MotoCorp, their realizations over here are expected to improve by 200 to 250 basis points. Also, Ashok Leyland, one of the CV players which has posted strong numbers in the month of June itself, the improvement in the product mix will be impacting positively on the margins of Ashok Leyland. Meanwhile, Eicher Motors, over there the scale benefits will be clearly accruing in their margins as well as the overall revenue growth.
Dhirendra, so you can separate the commercial vehicle segment out and you can separate the passenger vehicle. On the CV side, there will be the emission norm impact. On the passenger side, things should be better. What's your view on the sector?
Yeah, exactly. So passenger vehicle two-wheelers have done well and seem to be doing pretty well. And definitely the performance of CVs will be weaker in this particular quarter. So our guess is that the trend will continue for some more time. So in overall situation, if one has to look at Maruti doing reasonably well on the volume front and the realization front, and therefore reporting pretty strong earnings this quarter, and going ahead as well. So is the case with Eicher and Hero MotoCorp. So I guess the performance of Maruti, Eicher, Hero MotoCorp probably will be much better than Tata Motor or Leyland in this particular quarter. And I am of the view that there is definite going to be positive surprise probably in going ahead on particularly the PV and two-wheeler space. There is a segment which is naturally driven by strong fundamental. There is space which is driven by strong growth in purchasing power in the population. And what we have seen in recent history has not been much impacted by, say, for example, demonetization, and likely to be less impacted by GST as well. So this is the space to be in for the time being. So I guess, one can bet on two-wheelers and car segment for the year as a whole.
Okay, but Nischal, Leyland numbers, at least the June numbers indicated an improvement. So the more fundamental question is, should one base one's buying decisions only on the Q1 numbers, or look at the second half? And if one did that, which auto stock are you betting on?
So obviously, I think the two-wheeler space still continues to remain strong, and Eicher Motor is our top pick out there. We still continue to believe that there's going to keep on doing a 25% plus kind of a growth for the next 2 years. But we are also positive on Ashok Leyland. And Leyland, our call remains to be that it's going to continue to gain market share from Tata Motors and due to strong penetration which it continues to have. So we believe there is going to be surprises as far as Leyland is concerned. We believe this is also good stock to be added to the portfolio.
Okay. Very quickly, Sanjeev, your auto stock?
Yeah, so Ashok Leyland has been our top pick on the back when the commentary from the management when BS4 came, that the transition from the old vehicle to BS4 would be a negligible cost. So that was around 82, 83, and we had a very big overweight. That has played out well, and we think that volume numbers should please on the upside. Our other dark horse would be Bajaj Auto, where we think this quarter the export numbers will be weak. slightly because of the rupee, but going ahead we think their new launch and they would be the fastest to adapt to BS4 should be an added advantage in the next few quarters. We have a buy on Bajaj Auto and Ashok Leyland on decline.
Okay, Sanjeev, thanks very much for that. So Ashok Leyland and Bajaj are the two stocks that you like. Let's move focus to a sector which seems to have been under pressure for a while now. I mean, it has been under pressure, but pharma is what we're talking about. And let's get the overall perspective in terms of earnings for pharmaceutical companies from Ekta, who's here with us. Ekta, tell us, what should we expect?
Well, expect the lethargic and subdued performance for pharmaceutical companies to continue into this quarter from last quarter as well. The same issues such as US pricing pressure will dominate. But besides that, we will also see the GST rollout impact the India numbers, plus as well the rupee appreciation to possibly impact the entire or overall performance of the pharma companies. So, for example, Sun Pharma specifically is going to see a year-on-year decline in terms of the US business because of the Gleevec sales, the cancer drug, same time last quarter, and hence resulted in a high base. Dr. Reddy's US sales to be sluggish because the likes of Valsite and Vidasa generic are going to see US competition. Lupin, 15% Q-on-Q decline in their key diabetes drugs such as Glumetza and Fortimet is going to result in an overall subdued performance for the US markets. Cadila, the most important will be the commentary with regards to the US pipeline post the Moriah unit clearance which took place earlier in this year. And lastly, Divi's Labs is still going to be plagued by sales impacted due to the import alert on Unit 2.
All right. Thanks a lot for that, Ekta. Nischal, which pharma stock is your money on?
So, Sun continues to remain our top pick out there. But we like Cadila also equally good.
Sun may actually post bad numbers, right, Q1?
Pardon me?
Sun's first quarter is expected to be a little under pressure. Would you use that to buy the stock?
Yeah, I think so basically. But I think it's a pretty well known. I think the whole of FY is going to be a washout for the pharma sector. I think that's pretty well known. I don't think so. People are going to be really worried about saying that first quarter or second quarter. I think the whole of FY18 is not going to be good for most of the pharma companies. Most of the people are now looking to do a FY19 kind of a number where I believe there is going to be some upgrades coming in for most of the pharma companies. Sun specifically we like for the reason that they have a very, very strong position as far as specialty molecules are concerned, and that's where they are focused on. So they are much ahead of the other pharmaceutical companies as far as the specialty generics are concerned, and they have invested ahead of the curve for everybody, and I believe the valuation also is on their favor. So Sun and then Cadila, these are the two stocks basically which we like in pharma.
Lata, Sun is down 30% from the same period last year. I was looking at a brokerage note. In terms of specific numbers, its profits are seen down 30%. So, I mean, it's kind of a nice coincidence, but I mean, as Nishal pointed out, it's come off quite a bit in terms of valuations.
Market's discounted.
So, yeah. Let's get Sanjeev's thoughts in. Sanjeev, any specific name you like there, I mean, ahead of the numbers?
Well, we've had a sip right from the lows of 500 rupees on. So Sun, Lupin, Dr. Reddy, Cadila and Pfizer. These are 5 stocks as a basket which we made a sip, and we've been buying very, very actively week on week, and we think the worst of pharma may be priced in at 13, 14 times. I think it's the lowest valuation in the last 7 years. And already you've seen that the Obamacare and the rhetoric by Donald Trump is not getting through. So I think before they leave 2 million people off the pharma list, there will be a huge vacuum as far as supply goes. So we are going to see a hurried, closure of a lot of the FDA issues and pipeline being cleared in a hurry, which is what has been indicated by Dr. Reddy and Sun and Lupin. So for us, it's the 5 stocks which we mentioned as a SIP, and we are very, very bullish on these 5 with a 1-year view.
Okay, let me make a hurried attempt at covering the NBFC space as well. It's obviously been an investor favorite. Abhishek Kothari first to tell us what's expected from the Q1 numbers. Abhishek?
in the NBFC space, collection trends have improved, especially for the November and December dues. But loan growth barring two-wheeler financing and consumer finance is expected to remain subdued or modest. So in the gold financing business, Manappuram is expected to make higher provisions in their MFI or the microfinance book, which could dent their earnings. However, in the consumer finance, Bajaj Finance is expected to show a strong set of numbers, followed by two-wheeler financing, that is Shriram City Union Finance, expected to show a strong set of numbers. In the housing finance category, loan growth can be between 2 to 4% on a quarter-on-quarter basis, which is healthy given the circumstances right now. In the microfinance and small banks, expect elevated provisions that could lead to net losses for either Bharat Financial, Ujjivan or Equitas who are there in the space. Vehicle financing collection trends have improved, but growth has not come back. So expect improvement in asset quality, but growth rate to remain modest. Back to you.
Dhirendra, within NBFCs, where do you still find value and sort of where numbers you think will support?
We have a preference for gold financing NBFCs right now, and possibly number-wise one can expect better numbers from housing finance companies and two-wheeler financing companies. The numbers for microfinance companies could be all over the place, so there could be a lot of uncertainty around those, and many of them can actually report losses. So the numbers can be better for two-wheeler housing finance companies, but on the other side, microfinancing will be weak. Our preference remains gold financing companies, but the gold loan growth has not been that strong. But having said that, the outlook overall remains pretty okay. So we'll continue to prefer gold financing companies, particularly Muthoot. And on the housing finance, we think that the market opportunity is good, growth is good, but maybe probably the competitive intensity, etc., will not augur too well for the companies in that space. So the preference for gold finance, and probably, despite weak number in this quarter, one can start looking at microfinance companies all over again.
All right. We are running seriously over on the show. So, Nischal, one good NBFC if you still like it.
Housing finance companies. So we like LIC Housing Finance in the large cap and Diwan Housing in the mid cap.
Sanjeev?
Well, we are very, very bullish on the microfinance space, and we think Equitas and Ujjivan should be added on any decline. In fact, we have an overweight rating right from present prices, and any decline in numbers will be a given opportunity. We think they can be outperformers in the next year.
Okay, but anyway, outperformer for the moment actually happens to be AU Financiers, the newly listed stock. We take a break on that note, but don't go anywhere. Our research team is standing by to tell you what to expect from the oil and gas space, cement, and of course, the most importantly, banking sector. Our experts also will be with us for some advice.